Hi, this is Fatih from Fan Properties, and I'm going to show you this unique interactive tool that enables you to understand the Dubai property market, avoid generic conceptions, validate agents' advice, focus on what matters the most to you, and most importantly, to make a more rational decision. So to start, it's essential to understand the main elements of the market that are off-plan or ready properties, whether they are villas, apartments, or plots. And the main theme of the market in 2020 was the increase in the sales of the ready villas, which was 8.6% compared to 2019. Overall, there were over 35,000 transactions in 2019, almost 15,000 for off-plan and 20,500 for the ready properties. However, this means a decrease of almost 12%, but this is a generic statement which I will explain more in details. So if we continue, we see that the value, the total sales value was over 72 billion, and especially if you are new to the market, you should understand the main or the hottest areas in Dubai, the top areas, which are for 2020 when it comes to off-plan apartments, they were MBR City, which is Al-Msaddi. Here we are talking about projects like Subha by Subha Heartland, District 1 Residences, and Azizi. Then we have GVC, Dubai Marina, that had an increase in the off-plan sales, which is 11%. When we go to Business Bay, we see a decrease in the off-plan sales. However, if we check the ready apartments, we see that there is a massive increase of 45%. At first glance, you might think, okay, this increase in the volume, in the sales volume, would be followed by a price increase. However, if we dig deeper, we find that in Business Bay, there was an increase of 45% in the sales volume, but there's a decrease in the sales price per square foot. And that is not going to increase soon. Why? Because there are over 10,000 units. Sorry. There are over 10,000 units coming to the market in Business Bay only. And I think this is the largest number of new units come to the market. So if we compare the off-plan versus ready transactions, we see that the apartments, let's start with the villas, that is the clear one. So we see that clearly that there was an increase in the ready villas, and there was a decrease of 30% in the off-plan villas. However, we see in the apartments that the decrease of the off-plan was much less, which is like 17%, and in the villa, in the ready apartments, it was only 9%. And this shows the ratio between the off-plan and ready. In 2020, we see that it's almost 50-50 for apartments, and it's like almost 35% of the transactions were off-plan and more into ready. And as we said, there is an increasing interest in the villas, and that mainly maybe because of the lockdown that we lived before. So this is the interesting chart. So if we go to both categories, and And if we go to monthly, and let's for now tick all boxes, we see a clear pattern. There's here we have a pattern. So let's go to the ready, sorry. Here we see a clear pattern of increasing sales transactions. This is an upward trend, and this is what we want to focus on, or what we want to look for. And we assume in a very generic statement that this could be followed by an increase in the price. However, again, we should not focus on generic statements. You need to dig deeper into the area of your interest. When we go to the quarterly, we see that if we exclude Q2, which is the lockdown period, we see that really the market in 2020 performed better than 2019 for the ready properties. We are talking about an increase of about like 8%. And let's just remove the 2017 and 2018 to be more clear. So here it's clear that Q1, 3 and 4, the sales was much higher than 2019. Then we come to the sales value over years. Here you can get an idea about how the sales has been changing over years. And here could be a good idea to choose both statuses in all types of properties. And then we go to the sales volume. This is the number of transactions, as we mentioned before. Then we come to the price, the median, not the average, the median price per square foot overall. And this just gives a very generic, rough idea about the market. And we see that, let's go to apartments. And let's go to ready apartments, and we see that the prices in general, which I do not recommend, make a decision based on these numbers. It went down 3% or 4% compared to last year, and almost 30% compared to 2014. If we go to the off-plan, we see that the off-plan went down only by 1.6%, and keep in mind, this is something very important, that the off-plan prices are recorded at a higher price than the ready. Why? Because the off-plan prices include the agent's commission, whereas when you buy a ready property, you pay the property price, and separately you pay the commission. When it comes to off-plan, there's nothing called zero commission. It's just the commission is built in the price. Also, the cost of any offer, example, any like post handover payment plan, the cost of that offer also is included or built in the price. So this is an interesting thing here. This chart shows us the categories of the transactions based on the value. And it's interesting to see that the percentage of the villas, of the ready villas sold in 2020 were 13%, whereas in 2019 it was only 10%, which means there's an increase in the villas that are higher than 5 million. Then we come to this generic figures that are good only for maybe international investors, where they can understand, okay, by 800k I can get an apartment. For 2.5 million I can get a villa. When we go to off-plan, we see that, okay, well, for 1.4 I can get a villa. Here it's mainly about townhouses, because last year or 2020 there were many launches, not that many, but there were the launches were mainly townhouses. And when it comes to the supply, we see that the massive decrease is just 80% or 84% decrease in the number of the launched units. I think we are talking about around 20 projects versus around 80 projects in 2019. This is the number of launches. When it comes to the delivered units, we see that almost 29,000 units delivered in 2020. Agents, that's an interesting thing that the number of agents and agencies based on the last day of December 2019, we see that it increased by 8%, number of agencies, and number of agents almost by 7%. However, as of today, January, end of Jan, I think the number of agents in Dubai exceeded 5,100 agents. And that could be needed because we have over 300 projects under construction that include almost 100,000 units. Units means villas, all types of properties basically. When it comes to the delivered units per area, we see that town square or Yalayis or town square, there are almost like over 3,000, which forms almost 12% of the overall delivered units. And Dubai South, 4,000 units. Jumeirah Gulf State, JVC, almost 3,000 units. Business Bay, 2,500. So here we see that, okay, there were 2,500 units delivered last year, and keep in mind that this is a pressuring point on the prices. Whenever you have a new delivery, you are talking about like towers that might include over 500 units, like Privé Tower. Maybe I think it's around 900 units that came to the market almost within 2 months were handed over. I'm not sure about whether that handover completed or not, but anyway, the idea is clear that you have hundreds of units that come to the market and they are going to pressure the price. When it comes to the delivered units per developer, we see that Emaar delivered the highest number of units, almost I think, which is 16%. Then we have Shama, Town Square. Even though, when it comes to mortgage, even though there were new motivating policies or rules about mortgage, we still see that it did not even reach the 2019 performance. It went down by 0.6, and the value, there's a huge drop in the mortgage value, that is 30%. Here we see the most luxurious units and villas. We see that El Primo, Serenia, Valentine Business Bay, the Address Fountain Views, which by the way witnessed too many transactions last year. One at the Palm, and same thing for villas. We have, we'll talk about Jumeirah second, that is I think Bulgari, and another luxury mansion I think in District 1. These are some details that you can check on your own. And the delivery rate was 55% were overdue, were not delivered on time, and this includes the units that were rescheduled even, and also units that were supposed to be delivered in 2019 and without any rescheduling they were delivered in 2020. So visit this page, play with the filters, and focus on what matters to you to get a better idea about the market. Finally, another just a very positive piece of information is that in Q4, all the ready property performance in green. This is a really amazing thing, because keep in mind that even if you buy an off-plan property, you should always look at the performance of the ready market, because if you buy it off-plan, then you are going to sell it as secondary market. So in Q4, whether we are talking about Q on Q, which compared to Q3 2020, we see that an increase in transactions by almost 25%, and compared to Q4 2019, which is the most accurate comparison, we see that the increase is almost like 20%. That's all for today. and hopefully catch up soon with rental analysis. I hope this has been informative to you, and thanks for watching. Take care.